Welcome to FOMO Consulting for your daily AMC stock analysis video on Wednesday, April 28th. Ladies and gentlemen, we have been there, done that, and we all have the shirt, right? We have seen this movie play out before and not in an AMC theater. But rest assured, the apes are winning, the diamond hands are winning, and the retail investor is winning. If you find this video informative and entertaining, please like, share, and subscribe. It is a newer channel and I would certainly appreciate the support. Let's get into the video. So first of all, I want to personally thank each and every one of you who have liked, shared, and subscribed, as well as all of the very kind comments. I very much appreciate it, and I hope you enjoyed today's video. So let's start with a quote by the famous Yogi Berra of the New York Yankees. It's like deja vu all over again. We have seen today's price action play out many times, right? No surprise, but we have more days, in my opinion, in store that look very similar to this. We know our opponent is desperately trying to keep this from squeezing, but again, we live deja vu many days along the way, and we certainly will in the near future, in my opinion. So let's look at the broader market today. We were down in the three major indices, Dow Jones, NASDAQ, and S&P. A lot of the blue chip stocks were down, techs were down, and AMC certainly felt the effects of that, as well as many other. I know my personal portfolio was overall red for the most part. However, Apple and Facebook both had fantastic earnings, and they spiked after hours. So my assumption tomorrow, not financial advice, just my personal opinion, is NASDAQ, S&P should all be relatively strong tomorrow. Again, just my opinion. So let's touch on the breaking news from last night, where AMC, the CEO, and the board all decided the 500 million share vote proposal 1 has been completely removed from the May 4th shareholder meeting, which is fantastic news. That absolutely kills any and all FUD. However, like usual, they find a way to spin it. So now the 43 million shares have everybody nervous, right? At the end of the day, the 43 million shares have been available for many years. They have not used it, and they certainly did not use it in 2020 when they probably could or should have. But I do believe they are going to use these shares at some point to pay down debt. The CEO said as much. They could also use it for acquisition purposes, for a lot of different business-related purposes, but I do not believe it will dilute the current share price. I do not believe they're going to use them tomorrow. That is just my personal opinion, but the 500 million shares are off the table. The 43 million shares have been well documented and been on available for use for many years now. I don't see any reason for concern, but again, do your own due diligence. So let's look at today's price action. We were down 59 cents. Horrible day, just absolutely horrible. We're still at $10.85. We had a very strong day, in my opinion. Although we did lose a little bit of ground, we are still substantially up for the week. We are about, we're down 5.5% from our 13% jump on Monday. So we're still up around 8%. Pretty good week, I would say, thus far. I am looking forward to a rebound tomorrow. That's my personal opinion. We are, at the time of this recording, we are down after hours. That may very well reverse. We may be in the positive by market close at 8 o'clock. So let's look at the indicators. We are, again, officially in a MACD bullish crossover. Things are looking very good. The moving average, again, is trending very bullishly. And if you look at recent history going back to late February, early March, this bodes very well for us in the near future, in my opinion. So a bit more of a zoom in on the left side. Again, you see the MACD bullish crossover and certainly the moving average moving up. On the right side, again, just another illustration of where we've been recently. We were at the $9 support level. We bounced around that, fall through that over the last couple of weeks. Last week, obviously, we broke 10, which is great. Moving average continues to go upwards. Now we are in that, $10 to $11 channel. I believe if we break 11 solidly again, which I certainly believe we can and will tomorrow, just my opinion, I believe we will approach 12 by the end of the week, but there is going to be a fight, obviously. There's options contracts expiring, and there's going to be a fight, but I do believe we can reach 12 by Friday, just my personal opinion. So one thing I want to really look at here is the yellow arrows. So if you look, even on our quick ascension from late February into mid-March, where we peaked around $14.50, we had a few down days, as indicated by the yellow arrows, but we were still overall in a bullish pattern. If you look at the candle right below the yellow arrow on the left, it is a very indecisive candle, albeit red. If you look over to the far right, we are trending upwards, obviously with a bullish momentum, but yet we still have that indecisive red candle. So I am not concerned in the least bit. There's a history of these little ebbs and flows even on our ascension. So just wanted to point that out and show you that I don't believe the last couple of days, and even if we have a slight red day tomorrow, is anything to be concerned about. So when in doubt, zoom out, right? I know there's a few people that are concerned, a couple red days after Monday, such a great day. But look at the trend. Going all the way back from when we were at $1.91, we are heading clearly upwards. We are doing what stocks do. We are moving forward. We are grinding upwards. The MACD bullish crossovers have been our friend without a doubt. Every time we've crossed it, we have had substantial price increases. We are starting at a higher floor around $10, and I do believe the next 2 or 3 weeks, in my opinion, will be very bullish for us. So some really big dollars got dropped today on the options. If you look very closely, these are the largest trades of the day based on my Fidelity brokerage account. Nearly 2,000 contracts got purchased for a June 18th $20 call. Another June 18th $20 put. Nearly 2,000 contracts. 1,000 puts, June 18th, $20 strike. June 18th, $20 strike call. 1,000 contracts. Those are huge dollars, right? But my takeaway from this is the time frame and the bullish sentiment of a $20 strike with that much open interest and that much money being invested in this, I personally believe is very, very bullish. And it lets you know where the smart money is and what they're thinking. This just shows the bullish sentiment or bear sentiment, and we are overwhelmingly bullish. 70, 30, 25, 75, however you want to look at it, but we are overwhelmingly bullish as indicated by the green indicators. So this is always a fun one to look at, right, ladies and gentlemen? It is now trending close to $900 by early June. So there may be something to those $20 puts and calls that were purchased today, right? This has been floating around a while. This is off my personal Fidelity brokerage account. But this projection has not changed hardly at all over the last month or so. It keeps putting us over the $800 mark. Not financial advice, you be the judge, but it is fun to look at from time to time. Again, this is puts only on my Webull account for open interest on options expiring this Friday. Not sure who owns $6 puts with 10,000 open interest. I'm not sure if they're going to make money on that or not, but I do believe as long as we finish 10, 10.50, 11, if not 12, these people will have to cover by the end of the week. I believe we are going to see some bullish price action in the last 2 days. I believe we will see some covering. This is not a sustainable practice, I believe, unless this is extreme hedging of some sort. But again, I do believe there will be some covering that will play into our favor. So let's look at the short data here. Again, increase pretty much in all key categories. We're at 24.0% short interest, 37.15% free float on loan. Shares on loan continue to go up by about 1 million at 155 million. Days to cover is substantial. We have crossed the 1 number. I do believe that we are closer to really 3 or 4, depending on how you calculate it. Cost to borrow continues to go up daily. We're at 13.25 and still at 100% utilization for nearly a week now, which is just crazy. 387 institutional owners. We had an increase of 3 versus yesterday. That's huge, and they continue to increase their positions. The company is 100% owned. We own 79.2% of it. That's huge. We own the floor. We own the company. Apes, diamond hands, and retail investors. Total volume was 39 million shares. Short shares available is 1 million as of this evening on Fintel. Take that with a big grain of salt. And short borrow fee based on Fintel is 18.61, keeping in mind they have a smaller number of exchanges they deal with. So you can see there is a variance between Ortex at 13.25 versus Fintel at 18.61. Again, do your own due diligence, but it is clear all the key indicators continue to rise and rise rapidly. So let me show you a chart of AMC. Showed this, I believe, yesterday, but I started to simplify it. The red trend line are the shares on loan. If you look at the yellow arrow right before the baby squeeze in late January, we were at around 60 million shares on loan, and we popped to $20, right? We are now 3 times that. We are at 155 million. Absolutely crazy. Absolutely crazy. And another comparison is at the Volkswagen Infinity squeeze. They were at a 12.8% short interest. We are currently at 24.06. We are double the amount of short interest of the free float than the Volkswagen Infinity squeeze at this time of the squeeze. I do believe, based on that yellow line, that $14 is their breaking point. This is my opinion, not financial advice, but they have clearly shown that they will cover, they will back down at 14. They've already done it one time. They heavily shorted us to bring it down from the 14 level, which the FUD started heavily. They desperately got it down below 14. I do believe that is the line of demarcation. That is the battle line. That is the launch pad. Just my personal opinion. So everyone knows Tesla is very heavily shorted, and it has been so. So this is Tesla's shares on loan chart as compared to AMC. Short interest right now, 6.46. We are at 24%. Shares on loan, 38 million. We're at 154 million. Days to cover, about 1. Cost to borrow, 0.62. We are, depending on where you look, anywhere between 13 and 18%. Utilization, they are at 13%. We are at 100. It is clear as day. We are fighting the good fight. We've picked the right stock, the right company. We are in an exceptionally good position. but I wanted to show you a comparison against a historically heavy shorted stock in Tesla versus AMC. So one other just quick look. So this shows the short interest prior to the baby squeeze and where we are today. We are 3 times higher than we were before the baby squeeze. It's a very interesting look, right? So once again, you know, the $14 line, I believe, is the line of demarcation. It is clear that if you look at the yellow arrow, as soon as we cross that $12 to $13 range, they got out of their positions. We popped to 14 very quickly. They began to reshort to bring it back down heavily. All the FUD articles, everything, they were in full assault mode in mid-March to bring down the price, and they certainly did. I do believe breaking that $14 level will be absolute key and will initiate the squeeze if we can get above that and sustain above that for a few days. So everybody gets frustrated looking at the 1 minute charts, right? It certainly does, but you can certainly see in granular detail what's going on. So I've been doing a little research on algorithmic trading, right? Currently, 70 to 80% of the market is done with algo trading. Feels like we're in the Matrix or we're in a Terminator movie, right? The market is ran by computers at this point, nearly 80%. So I want to read you a brief article from one of the research papers I've been reading about this, and it might bring a little bit more perspective. It says algorithmic trading, also called automated trading, black box trading, or algo trading, uses a computer program that follows a defined set of instructions, an algorithm, to place a trade. The trade, in theory, can generate profits at a speed and frequency that is impossible for a human trader. We all see what anyone else would call consolidation throughout the day. We see the incremental walking down of the price. Algo trading can trade shares back and forth, you know, obviously pairs trading, a lot of different ways, means and methods to make that happen. The funds, the banks, whoever's using them, they make fractional profit per penny to walk these prices up or down. It's a profit center, quite frankly, but it also moves the price daily. So the one variable that the computer cannot focus on are the apes. The apes don't follow the rules. We buy and we hold. There is no program for buy and hold, right? It screws up the program, and then when we attack and we buy heavily, we rewrite the rules, right? So let me read this excerpt out of another article. In the economic sphere, a high proportion of decision making is already being offloaded to machines, and there have been warning signs of where that could lead if we're not careful. The 2010 quote-unquote flash crash, where algorithmic traders helped wipe nearly $1 trillion off the stock market in minutes, is a textbook example, and widespread use of automated trading software has been blamed for the increasing fragility of the markets. So obviously, when you're looking at that 1 minute chart, or you know, whatever, you step away, you're at work, and all of a sudden you turn around and there's this huge red candle, right? Or a huge green candle. We had one at the end of the trading day today. Who knows what that was about? The green, it launched, what, 30 cents, and we were in the 1060 range, and we got up to 1090. We assume that's covering, but it could very well be part of the algo trading. It could be part of the rules. We're just not sure. But I have no doubt whatsoever that algo trading is very, very involved in AMC, as well as other stocks as well. So one other brief illustration to show you. Currently, we own 79.2% of the stock. which means we own the vast majority. We are holding up the floor. So essentially, that means the other 20.8 is either insider owned, institutionally owned, what have you. And I believe that is the part of the equation that frustrates us because we see those 13% days followed up by a 5% drop, right? I have no doubt that that 20% specifically is being heavily algo traded as we hold the floor. We do need a catalyst, I believe, to launch us even further. But I believe every share matters, every fractional share matters, every 10 share matters that we buy and hold. It matters because we increasingly raise that floor and we increasingly take away percentage from the algos and we hold more and more of the float, right? So again, just my opinion, not financial advice, but I do think this is a relevant illustration that we do hold 80% of the stock basically. So as always, I have skin in the game. Yes, I was down today. Like many of you, I'm in this diamond hands to the very end of the squeeze. So let me read you one last quote. I think I'm afraid to be happy because whenever I get too happy, something bad always happens. Charlie Brown. Everybody loves Charlie Brown, but I think that's kind of where we're at with this stock. Monday was an absolute fantastic day, up 13+%. Last 2 days have been red. You have to kind of temper yourself on a daily basis, right? Not get too high or too low. Stay level-headed. Just stay with the facts, look at the details, and understand where you are on the bigger picture. Again, when in doubt, zoom out. But I do believe that this is relevant today and probably for days to come. Ladies and gentlemen, again, I want to thank you for watching. If you found this video informative and entertaining, please like, share, and subscribe. Again, it is a newer channel, and I would certainly appreciate the support. But as always, I hope your life is full of green candles. Take care. I'll talk to you soon.